So far this week, the NZDUSD has played out perfectly for us. We got that bounce from 63.50 and we're seeing a retest of 64.30 resistance. However, there's something happening here on the daily time frame that could push the pair much higher, perhaps even up into 65.80 or 66.30. Hi everyone, my name is Justin Bennett with Daily Price Action, and in today's video we're going to talk about the NZDUSD, the New Zealand dollar versus the US dollar. I'm going to show you the key levels I'm watching, as well as a pattern that's shaping up on the daily time frame that could push the New Zealand dollar much higher over the coming weeks and months. Let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started with today's NZDUSD forecast, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. So you may remember this chart from October 17th. I made a video back then when the pair was trading back below this descending channel top. So it was trading around here on the 17th, and I mentioned that a close above this area would likely expose that 64.30 resistance area based on these highs back here, as well as some lows. So notice how we had that close the very next day. So this candle closed above it, and we then had that push up into 64.30. Now on October 24th, just before last weekend, I also pointed out how this area would likely attract sellers, and we even had this bearish pin bar form, which hinted at a pullback last week. So on October 24th, I said to keep an eye on 63.50 going forward, because based on these two levels, so this channel top and also this horizontal level, we had this confluence of support around 63.50. So I mentioned on October 24th to keep an eye on this area for a bounce. And although it was rather choppy, we did get that bounce from 63.50, and you can see how the New Zealand dollar is once again testing 64.30 resistance. As part of that video on the 17th, we also looked at something on the weekly and monthly timeframes. So on the weekly, we have this falling wedge pattern based on this upper level that has 3 touches as of now, and this lower level, which also has 3 touches. Now notice where the New Zealand dollar recently bounced right at that falling wedge support. Furthermore, this level right here actually dates back to 2000 and 2001. So if I move out to the monthly time frame, we can see how this trend line extends all the way back here to 2000 and 2001. We then had this bounce in 2009, and again, look at what's happening so far this month. So based on this long-standing trend line and also this falling wedge support, this confluence of support right here, it shouldn't be a surprise to see the New Zealand dollar forming a bullish reversal pattern of some sort. And that's what I want to talk about today. So if I move over to a blank chart, it becomes a lot easier to see. And what I'm referring to here is the potential for an inverse head and shoulders. So this right shoulder is a little bit shallow. However, if we look at this, we have the left shoulder low back here, we have the head, and we also have the right shoulder low. Now, here are a few of my qualifications for an inverse head and shoulders. First, I like it to see it span at least 3 months. So if we notice, this pattern goes back to August. So this potential left shoulder started forming back here in August, which means that this span of time right here is about 3 months. So that does qualify. The second qualification is that these two shoulders, so this shoulder and this shoulder, must overlap. So what that means is that if I draw just a horizontal level along the top of it and a horizontal level along the bottom, these two shoulders need to overlap. They need to be on the same horizontal plane. So if you had something like this, okay, that would not qualify, because if I draw this a horizontal level on this left shoulder, notice how this right shoulder does not overlap. It's not on the same horizontal plane as the left shoulder. So that's the second qualification. And as we can see again, the New Zealand dollar does qualify in that respect. So although this right shoulder is a little bit shallow for my liking, this inverse head and shoulders does qualify in my opinion. Now, the most important part about any reversal pattern like this is that it is not confirmed until we get a close above the neckline. So in this case, you could draw a horizontal level across these high like this. However, a better representation of this neckline could be a slight trend line from these two highs. Okay, so this is how I would like to draw it, and you can see how today's high is actually rejecting that neckline. So notice how this is at the very top of this wick, again at the very high of this wick too, and notice today's high touched right off of that neckline. So this to me looks like the correct placement of the neckline here, and just like any other pattern, it is going to take a daily close above it in order to confirm this reversal pattern and to also cause this neckline to begin serving as support. Because remember, right now, this level is attracting sellers. So even though we're seeing the New Zealand dollar pressure this level as resistance, it is still acting as resistance on a daily closing basis. All right, so with all that in mind, I'm going to switch back over to this other chart with our descending channel. And I'm going to go ahead and get rid of this for now because we've already had that bounce from 63.50. All right, so I'm going to draw my neckline that we just looked at. And so essentially what I'm looking for from the New Zealand dollar, either tomorrow or next week, is I want to see a daily close above this area. Now notice too how this neckline intersects with 64.30. So 64.30, if you remember, is a key horizontal level. So if we do see a close above that 64.30 confluence of resistance, a retest of this area would likely attract buyers. Now, I'm also looking for sellers to come in. If we do get a close above this and a bounce from this area, the next key resistance I'm looking at is 64.90. So notice how back here, we can see that 64.90 supported the New Zealand dollar right back here. It supported it again on this candle. The pair closed below it and 64.90 started to serve as resistance. And if we get an eventual push above 64.90, so I do trade on a daily closing basis. So it's going to take a daily close above 64.30 and again, a daily close above 64.90. So if we see an eventual daily close above 64.90, we could see a push up into 65.80. So that's based on this low back here and also a couple of highs through this area. So 64.90 and 65.80 are going to be on my watch list if we do get that break higher. Now, we could also see a move up into this falling wedge resistance. So remember what we just looked at on the weekly time frame. This level right up here is that falling wedge top. So any breakout of this potential bullish reversal pattern could target that falling wedge top somewhere up around 66.30. Each of those areas could be well within reach in my opinion, especially when we consider that the height of this pattern is about 240 pips. So if we see a breakout either tomorrow or early next week, a breakout from that 64.30 area extended higher by 240 pips takes us all the way up into that 66.70 area. So notice, remember I said 66.30 was the approximate top of this falling wedge. So a 240 pip move could easily see not only 64.90, 65.80, but it could also reach as high as that 66.30 area, perhaps even a little bit higher. Just remember that there are no guarantees in this business, and nothing says that A, the New Zealand dollar will break above 64.30, and B, even if it does not mean that the pair will move higher. Remember, we could see a close above 64.30. That could be a bull trap, and then we could see an immediate plunge back below it and a close. If we do see that, however, that could also offer a selling opportunity for a move back down to 63.50. So you could really play this either way. Even if the pair does break above 64.30 and false break there, I think that there could be an opportunity here either way. As for what would negate this pattern, in my opinion, I think a daily close below 63.50. So if we get a rotation lower, back down to 63.50, and we see a close below that area, that would at least delay the bullish outlook. Because remember that this right shoulder right now is fairly shallow. So if we look at it compared to the left shoulder, notice how low this left shoulder is and how high this right shoulder is. So we could even see another rotation lower before we get that eventual push back up into resistance. So don't exclude that possibility, but I do think a daily close below 63.50 would at least delay the bullish outlook. But I do think as long as the New Zealand dollar is coming off of that confluence of support around 6,200, and it's also carving these higher lows and potentially higher highs, I do think we have to respect the potential for a move higher, especially if we see a close above 64.30, which would then re-expose 64.90, 65.80, and potentially that falling wedge top somewhere up around 66.30. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.